Markets breathe a sigh of relief over inflation. So, can investors stop worrying about it? Wall Street surged on Wednesday after US consumer price inflation came in softer than expected, leading traders to price in a Federal Reserve cut in June, plus one more later in the year. Chris Beauchamp is Chief Market Analyst at IG. Chris, do you think that forecast is reasonable?
Yes, I think so. Obviously, over the past week, we've had a bit of a seesaw move in markets and indeed in expectations. But yesterday's CPI, and I think combined with earnings and the fact that the payrolls number was so strong, really sends a message the US economy is in a very good place, and that ultimately is a good thing for markets. And they should learn maybe to live without having to worry about the need for the Fed to cut rates anytime soon.
The bond market has clearly been pretty nervous in the last couple of weeks, though, about a resurgence of inflation under Donald Trump. How worried do you think it should be?
Yeah, it's a problem that won't go away. I think it's going to be very hard for investors, for central bankers and politicians, particularly in the US at the moment, to say that inflation is certainly under control. I think what we could see is the potential for volatility around these CPI numbers again, as we sort of, is it or is it not coming back to haunt us? And that I think will come into play once the tariffs start to be imposed as well. So I think it's going to be very tricky to assume that that inflation will continue to behave. And there'll be, I think, resurgences during the course of the year. But overall, it seems to be relatively contained. I think that's the best we can hope for at the moment. And I think markets are taking comfort from that fact.
Also, of course, the big Wall Street banks kicked off the earnings season yesterday. They were very bullish. Bank CEOs clearly expect the Trump administration to be very positive for them. What did you make of that?
Yeah, good news all round, really, in those bank earnings, stock buybacks being announced. We had very healthy increases in profit. And of course, the outlooks were very solid as well. And I think banks are reveling in what they expect to be a much more congenial environment for deal making. And I think that does imbue investors and imbue bank management with confidence for the year ahead. I think maybe you've had a bit of a overconfidence. A lot was priced in going into the election, but with markets having been a bit sideways over the past couple of months at best, I think a lot of that maybe has been taken out of the picture and puts us in a better place to see further gains in stock prices. And certainly it's been a really good start to earnings season, and just the kind of thing I think investors wanted to see after the volatility of the past week.
Are there headwinds there that you think the banks might be underpricing at the moment? Won't the very strong dollar start to dig into their global profits, for example?
It may start to have an effect. I think they're hoping that the deal making resurgence that they are really kind of betting on at this point will help to offset a lot of that. And then, of course, you cannot take those geopolitical worries off the table. We might have that ceasefire with Israel and Hamas, but there's a potential for more disruption there. And of course, China, Taiwan. So that things will continue to pose problems. It's not clearly not a cloud-free outlook, if you like. But I think if we're taking these as a sign of where earnings season might go, then I think we should be very encouraged by these results over the past 24 hours.
Do you think the bond vigilantes might act as a check on Donald Trump's administration?
Yes, I think this is the warning. I think clearly the US is in a very, very different position to the UK, given its status as the holder of the world's reserve currency. But it is a kind of a message that bond markets are not asleep. They are not going to simply allow the administration to do whatever it likes and to continue to run up huge deficits. I think they've taken a lot of heart from the appointment of Bessent or the likely appointment of Bessent as Treasury Secretary, but they still want to see that they're not simply going to run wild with the corporate credit card and really undermine the US's financial position any further, because it certainly does need work. I think a statement of intent is the most important thing from the new administration, and it's one where, again, investors will need to be on notice throughout the year.
That was Chris Beauchamp of IG. You can watch more videos on Reuters.com.